This is the Business Lens, where we go beyond the headlines and make sense of the numbers shaping your money, your business, and Nigeria's economy. Good morning. My name is Divine Alex. So stay with me. Let's connect the headlines to your business, your money, and the economy. Starting from the headlines. Now, let's start with some good news for anyone who's been watching fuel prices nervously. Now, global oil prices have dropped sharply, with Brent crude falling almost 5% to below $80 per barrel, as fresh talks between the United States and Iran raise hopes of reopening the Strait of Hormuz, one of the world's most important oil shipping routes. Now, more oil flowing into the market usually means low prices. The question now is, if crude is getting cheaper globally, how soon should Nigerians expect to fill it at the filling station? That is the question on the minds of a lot of Nigerians. Now, let's quickly check the next one that says, speaking of stability, because in this case, we have to look at stability, right? Now, here's another scorecard from the Central Bank of Nigeria. Now, the CBN says the gap between the official exchange rate and the Bureau de Change market has now narrowed to less than 2%, while Nigeria's external reserves have climbed above $52.5 billion. Now, the Apex Bank also points to easing inflation and improved foreign exchange stability as evidence that its 2023 reforms are beginning to deliver results. But here's the bigger question. Are Nigerians beginning to feel that stability in their everyday lives, or is it still mostly visible in the data? That we need answers to. Now, while the CBN is talking about stability, the Debt Management Office is talking about opportunity. The federal government has opened the 2026 Federal Government Savings Bond, offering investors 13.963% on a 2-year bond and a 14.963% on a 3-year bond, with interest paid every quarter. Now, so if your money is sitting idle in a regular savings account, here's the question. Are government savings bonds quietly becoming one of Nigeria's smartest investment options? Would you jump on this offer? These are the questions. If you want to know more, you could also go read them up. Now, let's step away from that and look at the area where it's looking like confidence is about to do something really great. Now, confidence isn't only returning to the foreign exchange market, it could also be returning to insurance. NICOM says 43 insurance and reinsurance companies have successfully met Nigeria's recapitalization requirements, giving the industry stronger financial muscle to underwrite bigger risks, settle claims faster, and attract more investment. But let's be honest. Will stronger balance sheets finally convince Nigerians to buy insurance, or is trust still the industry's biggest challenge? Which is it? We are going to find out. Now, and while many insurers are celebrating, some are still trying to catch up. And that takes us to African Alliance Insurance, that says it has submitted its NICOM and is awaiting, it has submitted its recapitalization plan to NICOM and is awaiting regulatory approval after control of the company was returned to its shareholders earlier this year. Now, this reminds us that while the industry's transformation has begun, the recapitalization story is not over just yet, but we're getting there. Now, here's the conversation that could affect government revenue and perhaps even the prices of imported goods. Now, the Nigerian Customs Service is asking lawmakers to review Nigeria's import waiver and tax concession regime. Now, Customs believes it is time to ask whether these incentives are still delivering the economic benefits they were created for, or whether they are simply costing government billions in foregone revenue. Now, should tax incentives have an expiry date? That is a question we need to understand 100%. Now, let's step away from that and get into something that, you should know, especially if you own Bitcoin, trade crypto, buy ETFs, mine digital assets, or even earn, staking rewards. This headline is for you. Now, the Nigerian Revenue Service, NRS, has released the country's most detailed crypto tax guidelines, yet under the Nigerian Tax Act 2025. The new framework covers crypto investors, the traders, the exchange, the wallet providers, the peer-to-peer platforms as the P2P platforms, NFT creators, miners, and DeFi participants, making it clear that the digital economy is no longer outside the tax net. The question now is, will clearer rules attract more confidence into Nigeria's crypto industry or drive more activity on the ground? I know that we've been talking about tax for a long time, right? And this is the part where a lot of you were asking for clarity. And now this is here and in front of us. So you should really do well to go search for this information and read up as much as you can, especially if you're around the brackets of the people that were listed. Now, before we go, here's something for investors looking beyond ordinary shares. Now, exchange traded funds, or you can say ETFs, staged a strong comeback in July with 9 out of 12 ETFs listed on the Nigerian exchange, ending the month in positive territory. The standard performer was the Greenwich Alpha ETF, which surged 30.41% in a single month. But don't chase the numbers just yet. Now, we have analysts warning that ETF prices can sometimes rise because of low trading volumes, not necessarily because the underlying assets have become more valuable. So, is this the start of a new investment opportunity or a reminder that every impressive return deserves a closer look? That is the question I'm going to leave for you right there. Now, we are going to be looking at the stories and more after the break. My name is Divine Alex. Stay with us. We'll be right back. Welcome back. This is the Business Lens of Rapid Television. My name is Divine Alex. Now, we gave you the headlines, but we also need to look at some of those things because over the past week, Nigeria's economic story has been filled with a lot of headlines. Now, the central bank says the gap between the official and parallel foreign exchange markets, have climbed above $52.5 billion. The Debt Management Office is offering investors returns of almost 15%. Now, through the latest FGN Savings Board, NICOM has also confirmed that 43 insurance and reinsurance companies have met the industry's new capital requirements, while the Nigeria Customs Service is reviewing import waivers to improve government revenue. Now, we also have the situation where the Nigeria Revenue Service has introduced a comprehensive tax framework for digital assets, bringing greater clarity to the crypto economy. Now, on the global front, we have Brent crude that has fallen below $80 per barrel, potentially easing pressures on energy costs. Now, individually, these are encouraging developments. Collectively, this suggests that many of the reforms introduced, by this government are beginning to produce measurable outcomes. But they also raise a more important question. If the macroeconomic environment is becoming more stable, should the conversation now move beyond what government is doing to what businesses are doing? Has government done enough to create the conditions for growth? Or is it now the responsibility of the private sector to invest, to look toward expanding, creating jobs, and drive the next phase of Nigeria's economic recovery? That is our question this morning. Now, I have with me a global business analyst who is also an in-house analyst. Yeah. And his name is Daniel Effa. Good morning, Daniel.
Good morning, Divine.
I'm so happy that you're here this morning. I don't want to come and start giving you details because you already know why. Now, I want us to look at these headlines collectively, right? From the reforms that is looking like, okay, from the macroeconomy aspects, we are doing so great. And we, see what they're doing, the tax reforms, the crypto parts with the clarity from the NRS. When you look at all of these headlines, which of them in particular caught your attention? And then at what point do you think that, the responsibility is not beginning to shift from policymakers to the private sectors?
Okay, so I think all the headlines are relevant to the conversations that we are looking at in terms of what government is doing and how individual businesses or corporate organizations can begin to key into the conversation. So, but then one thing that I think where we should really start from is the CBN conversation, where it's saying, the CBN is saying that it has, through its reforms, it has done about 2.5% reduction, as in 2.5% is a gap now between official and the parallel market. Yes, it is a win because where we're coming from, it was almost over 100%. So in fact, I think the lowest it was ever was about 50%, right? So for the structural adjustments that the CBN has done in terms of how it has stabilized the ship, corrected, done a lot of correction when it comes to the irregularities there, the rent seeking on every end that's happened. It just boils down, just reflects the fact that structure is key for anything that has to be that has to really last, that has to really achieve good things, and that is what we've seen. So we've seen that. So now we are it's even confirming our conversations then, because then we're really complaining that this market just needs structure, right? Yes, you can say Nigerians or business people like to exploit, but then it is when you create the space for exploitation that it happens. So if your regulations are airtight, it is difficult for active players that are scared of losing their licenses to actually begin to do open exploitation or open rent seeking, right? Of course, you can still say some little issues here and there, but on a large scale, or the way it was happening during the previous CBN governor's time, it's almost impossible now, and that is a big win for the CBN and for the stability of the exchange rate, which is very pivotal to Nigerian economy, because of exchange rate is even key to any economy globally, because we don't really do anything in isolation, right? You need to transact, and for us, because of our of sensitivity of our exchange rate, our inflation figures, we need to have a serious stability, serious structural regulatory oversight, and that is what the CBN has done with that. That alone has created a lot of wins, particularly for businesses who suffered a lot of windfall. Only banks enjoyed that period, but for what's the word, for businesses, corporate organizations, manufacturers, construction companies, importers of cars, and so many things, they really suffered. In fact, food also really suffered a lot in terms of that exchange rate discrepancy, and because, of course, there were items that were excluded from the list that the CBN would give or give access to dollars. So it really caused a strain to the economy. In fact, it literally created a parallel economy. Like, we had two economies. We had the economy that the CBN provided for, and we had economies that everybody has to go and source for their dollars, and it was a very serious one. And now that we are back here, what we should be doing, what we've done already, which I've always been a proponent of, is we've created stability in the exchange rate. Now the conversation then is, what do we do next? Are we saying, just like the IMF is saying, that the naira is undervalued? I don't support that notion. I don't think we should strive to get to 1,000 naira to $1 too fast, because yes, that might be the ideal rate in some quarters. I don't share that view. I believe that at the end of the day, a cheaper naira will always be a very good option for a country like ours that has the potential of really selling itself out there, right? So if you're going to be, if our plan in the next future is to do more exports, just like we're doing with Dangote refinery, you get getting more dollars from our exports, you get pushing a lot of more agricultural products, pushing a lot of more workforce out there. Nigerians will earn more dollars, which means that, or earn more foreign currency, which means that it's more naira for them. So for that, you would want to just keep it stable. You get, if this particular move continues and we are seeing $3, $4, $5, $6, $7, $8 billion in addition to our reserve almost every other month, we can now begin to say, yes, I think that the naira is too cheap. We need to now start bringing it closer to 1,000. But for now, I think that let's just leave it this way and keep it stable. We kept it stable almost for a year now, hovering around less than 1,500. Now for 2026, that's done 1,400 in terms of exchange rate to the dollar. So that alone signifies proper planning for businesses. You can begin to look at the charts, look at the figures, the highs and the lows, and say, yes, I think that you would never get to a point whereby in 2026 where we will see the dollar to the naira maybe at 1,410 or 1,420. You can almost be certain that
be able to plan.
That in the next 5 months to the end of the year, you are still going to see the naira to dollar after. So for the CBN, they've really done well in terms of that conversation, and it is just a corrective measure. Now what we are moving to next is to have is to now give us an exchange rate regime plan of how this is what you should expect from the CBN in terms of that.
Okay.
Yeah, that will now give businesses even more perspective into how they're going to plan for the next 2-3 medium term and long term.
Okay,
approach.
so now when we look at all of these things and we place them side by side, at what point does responsibility begin to shift from the policymakers to the private sector?
As soon as the policymaker has done the right thing, set up a framework, because then policy is just an announcement. Setting up a framework, institutions to ensure that the policy is driven home, right? Now makes it easier for businesses to say, okay, this is what the government has done. Because if, for example, I'm a businessman, or I'm trying to get a business into Nigeria, and I'm asked to do a marketing plan that includes a personal analysis, what is the political landscape, what is the legal framework, those are the regulatory framework, those are the conversations that will come. That will come into the conversation, and if I can say, okay, this is the exchange regime we've had since 2023 or 2024 when 2023 December when the current CBN governor came in. This has been the approach. This has been what we've been doing. It is easier to now say, okay, this is the perspective. This is the view of the CBN, and it is easier for you to play around that particular conversation. So yes. When the government does its part, which for example, this particular example, it is easier for businesses to follow. So just like, for example, I think another story you talked about was the insurance, right? NICOM saying capitalizing businesses because, of course, the government has said it wants to achieve a $1 trillion economy, and we need our financial institutions to be strong enough, right? And out of about 67 registered insurance companies and insurance companies, we have about 43 of them have made capitalization.
They made the new threshold.
So that alone, it signifies strength in that sector, right? It means that now you can now see more innovation from the insurance company. Now that the government has, okay, go and expand your net, go and expand your tank, right? So that you can do more business, you can be able to take on more liquidity, more risk and all. What happens is that these businesses now, okay, yes, they've given us, now we have expanded, let's go and look for business. So it is easier when the government has set up the regulation or the framework. Businesses now key into that because for insurance as an aid to finance or aid to trade, it is one of the most important, right? Yeah, though we are not yet at a developmental level or top development level in terms of insurance in Nigeria. In fact, pension has even overtaken insurance in terms of finance products. But then we can only get better if there is this kind of reform, capitalization, and businesses are now tasked to go and create more concept, because Nigeria is still a very semi-formal economy, right? In terms of not fully formal, lagging informal. So you cannot have your product basically focused on the formal sector. It will be a big loss to you because, for example, the market woman in Kano or the onion seller in Sokoto, how do you create an insurance product for such a person? Those are the things that will start happening, and they will start trying to embrace the informal economy. For example, Taka Food, which is an Islamic product, Islamic name for insurance, is doing way better again in that part of Nigeria, because and you're seeing considerable growth of Islamic insurance companies. While the traditional insurance companies are not doing as much, and this kind of capitalization now will practically wake everybody up. The same thing we did for banks in 2006. Same thing to do for banks based on what's happened last year and this year. It's the same thing that will happen also with insurance companies.
So do you think that at the moment, like businesses, have improved operating environment at the moment, or can we say that businesses can actually continue to blame government for every challenge that they have at the moment?
So it depends on the kind of business, right? So we've identified that in whatever Nigeria has faced in the last 10 years, we've seen very good numbers from the finance space. Right? The finance sector, whether it's any financial services, are seeing considerable growth in terms of whether it is number of customers, whether it is assets, whether it is liquidity. Why? Because which is a testament to the fact that yes, there might be an expansion, but it is not a full-blown expansion, right? At the same time, we've also seen considerable failures, right, in the agricultural sector, manufacturing sector, right? So you cannot say that the conversation is holistic yet. It is just part conversation, and that is why when you see the GDP figures come out, you will see the sectors that are really
Doing
doing
well.
well because some government has figured out how to solve those problems. But then when you look at it holistically, you realize that the potential of you growing an economy, right, is really lies around what happens on the ground, right? Whether it is manufacturing, whether it is construction, whether it is mining, whether it is agriculture. Those are the things that has to expand a whole lot so that the services sectors like the insurance, the finance can now also ride on that growth, right? So what we are seeing is just the growth at the top, not from the ground, which is very key to actually build any major economy, right? So that particular those sectors require actual physical reforms like infrastructure, like electricity. You need all those things to be there for you to say, okay, you can now build on this, because those sectors I mentioned can combine, employ 10 million Nigerians without stress in a single year, without stress, because if they are properly expanded, there will be enough jobs for people to do, right? So, but service sector is limited based on the opportunities that this sector, for example, if you have a refinery in a particular zone, for example, Dangote refinery, for example, has created enough services around itself because of how big the refinery is, right? People now work, you now see people open up restaurants around the refinery because there's a refinery there. So you can imagine how many of manufacturing businesses can also have that kind of, opportunities for people to take advantage of if there is actual, infrastructure on ground to help them grow and expand faster.
Their businesses. Okay, now when we look at all the headlines put together, actually for this week, from Monday to now, we've been seeing a lot of positive headlines. The CBN saying, oh, the FX market is stabilizing. NICOM talked about the 43 firms that were able to meet the new capital threshold. Now, we also saw the government attracting investors into savings bonds. Now, Custom is also asking for review, of the long-standing trade incentives. Now, when we look at all of these headlines and we place them side by side and we look at the reforms that we've had over the past years, now, are these reforms creating confidence within the private sector?
Yes, they are to some extent. However, I want to mention, I think there was also a crypto conversation there.
Oh yes, the crypto, the clarity.
That one is going to cause a lot of problems because I feel like before I got your question, I feel like that was not well thought out. Right? Yes, we want to make a lot of money from taxes. There is this supposed large number of activities that happen in that space, right? Which I don't still feel government has a clear picture of. Everything is still assumptions based on the fact that I think because we are probably second highest in volume. But then for you to be able to properly tax a particular sector, there must have been some level of investment even in time, in policy, that for you to say yes, you can actually I can actually tax people, or can actually get just about 3 years ago, the CBN basically went all out against one of those big companies that by now would have actually made sense if you're taxing them now, because you can have you have effective partnership with them, right? So SEC has shown that yes, virtual asset providers, we are willing to do business with you, but CBN has not, right? So how then do you want to enforce a lot of taxes in a space whereby I'm seeing about 3 or 4 tax, stamp duty, withholding tax, company income tax, even VAT, that's about 4, right? At the same time, it is very it is almost impossible, right? Let's call it spade a spade. It's almost impossible for it to be achieved. In fact, it is going to create an extra layer of additional cost. Now this is the thing. One of the things that we've done with the old ASLIN and everything, and the whole structural everything, is that yes, the discrepancy between the official rate and the parallel market has actually closed down, right? Particularly even with the cryptocurrency or the stable coin space, right? If you are pushing all these taxes at once, what happens is that you are going to now create another extra layer again. People will start factoring every of those taxes into each transaction, which means the consumer will start acquiring these things a bit expensive than the normal rate. Yes. Am I saying that there shouldn't be taxes? No. But I'm saying that the introduction should be It should be gradual. I think this year, for example, I think conversation should have been just VAT first, right? Start with VAT first, which is 7.5 or whatever transaction with value, or start with the stamp duty, right? Stamp duty in Nigeria for transactions from banks is about 15 naira. So
Yes,
why
15
is
naira.
one for crypto 1.5%? That is too much, right? So maybe 0.5% would have been the best thing, because either way you will still make a lot of money when people you want to tax consider tax to be cheap. You are likely going to consistently make them comply.
To be consistent.
Rather than make it push all of them at once, and they start looking for different ways to evade it. And that is what I want, as in I believe the NRS should begin to consider. These taxes they've mentioned are ideal for any sector. That is what is obtainable currently. But for a space like that is that sensitive, you start gradually instead of pushing every of those taxes at once. I think that is basically that. So then for the question you asked me about,
yes, on the private sector.
The thing is, like I said earlier, it is the private sector would feed off whatever activities that the government is pushing towards them. If the government is saying now our plan is to create an agricultural plan to be able to produce so number or be market leader or be the global exporter of yam, for example, of yam, cassava, and palm oil, for example. And this is what we're trying to do for every cluster, every state that has capacity of producing this. We are giving out this social fund or this social structure, or this we are trying to give us a road network that leads to all those farms. We're going to work on a 2-year plan to make those roads accessible, or we are going to create security conversations around each of those clusters so that we won't have issues of bandits, of miscreants trying to disrupt agricultural activities. When all those things are done, and a private sector guy can easily go anywhere in the world and ask for funds to start up a business in that space. And before you know it, that single business can be doing 200, 300, 500, 1,000 employees you get. And that is, you've taken out 1,000 employees off the labor market. You've gotten them employed. And that is how a lot of these economies globally have expanded different sectors. And that is what that is how private sector reacts to government. You can't do it without government. You can't start anything like government, because you can't just create. For example, let's assume that you have a farm. You can't create a road yourself. Someone will come and stop your work and say, "Do you get an approval from government to start creating a road?" Or you set up your own militia or your own security. The government will also tell you, "Do you get approval to set up a security? How do they even get arms?" So those are the conversations that eventually happen. So you cannot necessarily get anything done without government pushing for interest in that particular sector.
So do you think that businesses are actually waiting for maybe one more signal, right, to jump into making fresh investments, committing maybe bigger capitals of fresh investment?
The thing is, one of the things that I think the government has not unlocked, right, is understanding is the question, because what we keep saying is we're not getting FDIs, right?
Yes.
But then have we sat down to say, as it stands, where will FDIs come from? What are the sectors we currently have? Where are we likely to see, if we open up now, that we would likely see FDIs? And I tell you, it's food, because more often than not, if you need to follow whatever is happening with the FAO, the food, World Bank Agency for food, and so many other food conversations, you realize that the population is growing at a pace faster than the capacity of food we can produce. That's why you're seeing a lot of bio conversations, because the food supply is being threatened, right? As you get from weather conditions to so many issues, right? So hunger is getting to the all-time high because of the low supply of food in relation to the demand, right? Now, we're also saying that Africa might become one of the most populous continents in another 10-15 years, right? That means that Africa alone is already a market, right? So if Nigeria is looking to easily attract investment, right, it should be trying to expand, open up its agricultural sector, and the FDIs will naturally come in. And that is the way to approach it, right? So if you're saying, just bring FDI, we are ready to do business with you, on what level, right? As far as crude oil is concerned, the demand you get in the FDI investment in crude has drastically declined for the past 10 years, right? Because everybody is feeling like the world is going to a more renewable energy level. So everybody's moving to the renewable energy space rather than trying to invest in drilling more oil, right? So when you look at all these conversations, also you can say that you can begin to see that, okay, if you also have if you're also looking for investment, you can also open up renewable energy space. You get, but then that also requires to have infrastructure, that requires to have road network, that requires to have electricity for businesses to be able to produce those things. So when you see trajectory of where exactly we need in terms of expansion, you know that it is important that government steps in and says, okay, if we want to get $50 billion in FDIs in the next 5 years, what do we need to do? And that objective will now bring you back to the sectors that needs to be worked on, and we can see visibly that there's work being done there. For example, now see what's happening with the agricultural sector.
Okay.
We've done, last CBN governor spent over a trillion on Anchor Borrowers program, which was targeted, which was the idea of the Anchor Borrower program was to expand our rice production and similar products, right? And we spent a whole lot on it, but achieved almost nothing. Why? Because yes, apart from the corruption and inefficiency in the disbursements and people not being able to pay, people not wanting to pay back, there's also insecurity. There's also weather conditions, right? Are the insecurity reduced? No, it has not. And so those are the things that would be driving your so when businesses all over the world, investors all over the world are looking at where to push their funds, and they are saying that the only thing that is available for them is real estate and your stock market and your bonds. They just put your money there, and but then what can really make them sustainable money over a long period? It's actually what is on the ground, the mining, the agriculture, the manufacturing. Those are the things that can make them money because the market is there, right? So those are the things that if government really wants to get the right investment, it needs to deliberately create plans and deliberate implementation of those plans to ensure that those sectors are opened up for private sectors to now say yes, let's take advantage.
Okay, so now let us also look at what I think is a contradiction, right? Because it continues to stand out. Now we have investor confidence that is looking that it's improving massively. We could say that we've done so well for a number of months. We also see institutional confidence also, improving, exactly. Now, but we somehow have consumer confidence still looking like it's weak because of the fact that households continue to struggle with purchasing power. Now, this is the question. Can an economy experience genuine recovery if investors are optimistic but consumers are pessimistic?
But it can't because consumers are the essence of everything, right? So there is no business without its consumers, right? You cannot set up a business and assume that, don't worry, they will buy it. It doesn't work that. That's why you do a market research, right? So if the consumer perspective or confidence, right, is more important than any other thing, right? If your consumer confidence is high, all right, you are likely to get more demand for a product or in a sector, right, than when you have investor confidence. Investor confidence is not holistic right now. Right. Like I said, it is basically in the markets, in bonds, in whatever treasury bills, in OMO bills, right? But when you actually have consumer confidence, which is usually tied to the ability to actually buy products, ability to consume products, right? So, and this is big, and this is one of the reasons why some of the extreme policies that we've done did not really consider all those conversations, right? So, because what we've done is we've fixed the issue from the top, but then the real fundamentals has not been fixed because the fundamentals would affect the consumers. If you remove subsidy, for example, that suddenly took an average household's cost from maybe 5 naira to over 25 naira, right? You've killed their consumption capacity, right? So what you've done instead is that you've killed their consumption capacity, which in turn has killed so many other businesses that they would have pushed their disposable income to, right? So what have you done? We've now also moved people that will have a disposable income to save. The savings will give banks more money, right? Banks can now play around with those monies, but now banks have limited funds. Well, most of they have limited funds, so the only thing they can do with those funds is to push it in almost sure bills or treasury bills by the government, get OMO bills by the government, just so as to guarantee returns for themselves and be able to do whatever they are doing. But normally, if there was enough disposable income, right, the people would easily push these funds, save, and also invest in the market, right? The low number of people you are seeing in the market is a function of the fact that consumer disposable income is low, right? So when you look at dynamics, you realize that there is the focus actually should be on your consumers. The focus should actually be on the people the people on the street day to day, because they are the ones that would reflect business progress, right? Business growth in an economy. So even for a country that is saying it is chasing production in quotes, right? To produce more, you still need consumers for your product. I remember was it 2 years ago or last year? No, it was 2024. Dangote was really out and out with the marketers, and I was always saying on whether on Spaces or on the show that why can't we focus on customers outside of Nigeria? Like, look for customers. West Africa, for example, is a market here. Why not seek to just expand your market instead of this bent focus on the Nigerian market? And right after now, I think one of the government officials visited his refinery, and one of the things he said was that we now have demand from Saudi Arabia, we have from the US, we have from a lot of countries in Africa, West Africa. Togo is now a major selling point for the Dangote refinery products, right? So that is the way it works with any economy, right? You need your consumer is your focus. In fact, countries like advanced countries would basically, that is what informs their reforms in terms of what would they push again, because during the pandemic, for example, when everybody was at home, some of these countries gave out funds to people because they wanted to increase people's consumption level, because that is the only way businesses will stay afloat. And that is how it works. So if you're focused on increasing interest rates, not minding whatever happens to the people, they will end up having people who are unable to consume basic products. We've gone through different phases of our fast-moving consumer goods, so much so that such a till there's no quality anymore in this product, and nobody can say anything, because what do you want to say? These businesses are just striving to keep the lights on, and that is the big issue. That if a policymaker thinks about the consumer before making a policy, you realize that the policy comes out differently from whatever we are saying so far. Of course, it is good, but it is not holistic enough.
Okay, now before I take us to what I call report card or scorecard, now is the next major policy challenge now about stimulating demand rather than introducing another round of reforms?
Actually, that's just it. That's it. It is stimulating demand. That's the conversation now. I've seen different theories. Everybody saying, some people saying increase the minimum wage, some are saying reduce the inflationary pressures, right? I'm of the school of thought that we need to reduce the inflationary pressures. Why? Because that is way more important, right? When you increase, for example, the minimum wage to over 200,000, for example, I'm not against people earning more, but then I think that any more should be a function of additional value, right? It should come with value addition rather than just dashing people money. Because what happens is that it will also raise price levels, right? As soon as salary goes to 200,000, price levels will go down. So why not just work on the structural issues that's affecting your inflation, to bring it down to considerable minimum? Actual inflation, not the figures inflation. Actual means what you can actually feel on ground. Right? So when that comes down, it is easier. Whatever monies people have, it will always worth something to them. If minimum is 20,000 naira and inflation is actually maybe at 3-4%, it wouldn't matter, because people will have enough disposable income either way to be able to consume and still have enough to save and invest, and also acquire other products. Okay,
now one more question before we go to the scorecard.
Okay.
Now, when we look at all of these details that we've been able to analyze and look at and expand, at what point do we say, okay, that the government have done enough, private sectors should jump in? How?
At what point?
Yes.
So I think it's always it's a pointer you always know. You always know when. the sectors that government has done a considerable level of reforms in regulatory oversight, institutional reforms. I mean, you've seen the growth in those sectors, right?
Okay.
So it is always automatic, right? When you see it's opportunity, businessmen look for opportunities, right? The reason why fintech companies, for example, are making so much money in Nigeria is because there was an opportunity that they saw, right? So,
Yes.
so that is the way it works. Opportunity when the government makes a reforms or makes a policy, opportunity comes out of that policy and people take advantage of that policy. So that is the way it works. So it is as soon as it happens, it happens. It is not usually before, right? Because if you see opportunity before the government makes a reform, then you're at a very big risk, particularly when it comes to Africa, where we have very low level of justice when it comes to and equity when it comes to you getting reparation from for damage done to you. So, but then it is usually as soon as it happens, you will definitely see businesses and the private sector move
faster and quickly. Okay, now let's look at the report card, right? Putting the headlines together side by side. Let's have the graphics, please. Now, oil is now below $80 per barrel, and we have the FX gap below 2%, and the reserves above $52.5 billion. 43 insurance recapitalized. Treasury bills attracting 3.62 trillion naira in demand. Government introducing clearer rules for crypto taxation, even though you have something entirely different to say to that. Now, if we look at all of these things and all the conversations that we've had, if we are to return exactly 1 year from today, which three economic numbers will tell you that Nigeria has moved beyond reform headlines to real economic transformation? And equally, that's on the flip side. What three numbers would immediately tell you that these reforms have failed to translate into real economic transformation?
Well, to be honest, none of these figures here would give a clear picture because whether your bond is oversubscribed or not, it doesn't mean anything if whatever you're using the bonds for doesn't reflect actual growth, right? So that's one. When you look at exchange rates, exchange rates are 2%. Yeah, it's just exchange rate. It has no extra implication, right? So even when you're doing research, they will still tell you to attach exchange rate conversation to something, right? So it's right. Maybe it's usually exchange rate to inflation, right? So either way, if we maintain it at 2%, which is fantastic, that's stability. But stability, it doesn't necessarily equate to growth, right?
Yes.
Because what we've done is stability means that yes, you are no longer at the negative. You are now above sea level. But are you growing? Are you developing? Development is conversation now, and we've not started that at all, right? So none of these figures will still reflect an actual development yet, right? Crude oil is it's for countries that are milking it properly. Crude oil at over 80 is even better. But for us, crude oil below 80 is better because we don't want to buy oil, petroleum products at a very high rate, yes. Because we don't have the money to consume to purchase these things. So for me,
the scorecard.
These figures are not the actual figures that will determine that. They are just the peripheral figures, which if we build upon can now give the real figures that we need. Shows
so now if you were creating Nigeria's economic scorecard for Business Lens, for example, now what single indicator do you think would carry the highest weight? Is it the GDP growth? Is it the private sector investment, maybe household income, inflation, employment or productivity? Which of this do you think is going to be
poverty level? Because less people are poor, the faster your economy will grow.
Great. Okay, thank you so much, Daniel, for that one. Now, before we go, let's look at the business word of the day, which is crowding out. Yes, I know we've said it a lot of times. Now, can government borrowing actually make it harder for businesses to grow? The answer is yes. And economists call it crowding out. We say it a couple of times here. Now, Crowding out means or happens when the government borrows heavily from the financial system, leaving less money available for businesses and individuals to borrow. Now, as demand for funds increases, interest rates can remain high, making it more expensive for the private sector to access credit for expansion, for investment, or maybe job creation. Now, this week we said the central bank allotted over 1.25 trillion naira in treasury bills after receiving subscriptions of about 3.62 trillion naira. Now, while strong investor demand helps the government raise funds, some economists warn that sustained government borrowing could crowd out private sector investment if banks and investors prefer lending to government rather than lending into businesses. Now, this is why this matters. A healthy economy needs a balance. Government needs to borrow to fund development, but businesses also need affordable access to credit to invest, to expand, and from expansion, they can create jobs. So if too much money flows to government borrowing, private businesses may struggle to grow. That is why our business word of the day is crowding out. Now, every economic reform is ultimately designed to achieve one goal: create an environment where businesses can thrive and people can prosper. So this week's headline suggests that many of the building blocks are beginning to fall into place, but stronger reserves, a narrower exchange rate gap, and healthier financial institutions are not the destination. They are the foundation. So the next chapter of Nigeria's economic story may no longer depend on what government does next. It may depend on whether the private sector is ready to seize the opportunities that these reforms have created. My name is Divine Alex, and this has been Business Lens on Rapid TV. Thank you for watching. Join us at the next episode. Bye for now.